Hey guys, what's up? How's it going? Robin here, back again, once again on the channel. In today's video, we're going to be doing a deep dive of the ETF called XIU. So if you guys are brand new to the channel, the first thing we're going to be doing is we'll talk about the ETF. I'll give you guys a quick little introductory to it, and then we're going to be doing a deep dive, and we'll explore all the facts, we'll go to the website, we'll check it out, and I'll share with you guys my thoughts and opinions, and I'll give you guys some advice if you guys want to invest into an ETF like XIU. So the first thing we're going to do is we're going to do a quick little introductory to the ETF itself. So if you guys haven't already got the hint, the ticker for it is XIU, and this is the S&P TSX index, which is basically comprised of 60 individual holdings. So it's got 60 stocks inside of it. It currently trades at $30.91, so it is a fairly cheap ETF for you to buy into. And at the time of doing this video, it has a dividend yield of 2.69%, and this is paid out on a quarterly basis. So that's a quick little summary of the ETF. Let's kind of dump inside the fact sheet. Let's check out the iShares website, and let's kind of dig more into the ETF and go over the holdings, and we'll see kind of what kind of companies and how this ETF actually works. And just really quickly before we do that, I just want to do a quick little mention. If you guys want to learn how I built a Canadian-based dividend portfolio completely from scratch, check out the link in the description of this video. There is a small little mini e-course that you guys can take. It shows you guys everything I've done to kind of get my portfolio, how I went basically from $0 to 100K inside my Canadian-based dividend portfolio with Wealthsimple Trades. So if you guys are interested in that, check out the link in the description of this video. Alright guys, so we're going to be doing a deep dive into XIU, and I'll share with you guys my thoughts, my opinions on this ETF inside this video. Now, just full disclosure, I don't actually own this ETF myself. When it comes to Canadian ETFs, I actually hold VDY, but as you guys will see, this is a perfectly fine ETF to hold, and I would highly recommend it if you're looking into an ETF to buy into the Canadian market. This one is definitely a good one. So we have the iShares S&P TSX 60 Index ETF, and once again, this is basically buying into the overall market. It currently trades at $30 or $31 at the time of doing this video. Might change. The one-day NAV change is down negative, I guess, 0.5% since this morning, and the year-to-date earnings since the beginning of 2022 is going to be down negative 4%. So it has dipped a little bit overall, which is kind of interesting because depending on what kind of funds you hold, your Canadian stocks could be up a little bit or they could be down. It just really depends on what you hold. XIU is exposure to large established Canadian companies. One of the largest and most liquid ETFs in Canada, started trading in 1990, making it the first ETF in the world. That's actually an interesting fact. I didn't actually know this. I don't know if that's 100% true, but I'm sure it is if it says it there. So that's back in 1990 is when this fund started. And again, seeks long-term capital growth by replicating the performance of the S&P. So this is a growth-based ETF. Honestly, it is very comparable, very similar to the S&P 500, kind of similar to what I hold in terms of VFE, but it's really just the Canadian version there. So we'll dive into here. So we'll look at some of the returns. So the average annual return over the past year is 0.5, so we're just blank that out there. 3 years it's been 10%, which is pretty good. 9% for 5 years, and 10 years 10. We're kind of sitting at that same. Since inception it is 7%, so that's kind of similar to the S&P 500, very close. But over the past 10 years it has done a little bit better than that, sitting at a return of 10% or 9%, I should say, on average. We could look at the cumulative returns. I'm not going to worry about that. We're going to focus on the calendar year to kind of see more in detail what the returns are like. 2017 we've seen a return of 9.57%. 2018 was a negative 7%. 2019 was a big gain of 21. 2020 5% gain, and then 2020 was 5% gain, and then 2021 see a gain of 28%, kind of making up for that low year in 2020 as well as 2018. So this ETF, once again, very similar to the S&P 500, has had its good years and bad years, but obviously it's got some pretty good returns over the past little while. Going down here, we'll look at some of the more facts of the fund. We have a number of holdings of 60. Rebalance frequency is quarterly, so every quarterly they adjust things, they change things. Looking down here, there is DRIP available. Distribution frequency is quarterly, so every 3 months or so you're going to get that dividend. The 12-month trailing dividend yield is 2.67%. I think I mentioned that earlier in the video. And I guess the distribution yield in total is 2.84%. So that's, I guess, at the end of the day. And we go down here a little bit further. Some of this stuff we don't really need to know. I'm just going to browse through it really quickly here. Just cover the big things. So nice thing about this fund is the fees are relatively low. Management fee is 15%. The MER is 18%. So this 0.18. Try to highlight this here. 0.18% is going to be the full fee that you pay. So if you hold this fund, you'll pay 0.18% on a yearly annual basis. And if you guys are brand new to ETFs, that'll be automatically deducted into the price. So it's all good to go. You don't have to you won't have to worry about it. It'll automatically be done. But a 0.18% fee is relatively low. I hold funds that some of them are lower than that, but the average I would say for me is like 0.2%. Most of the funds I hold, so that's actually fairly low, especially when you look at the returns and whatnot. So it's pretty sweet for that. Risk indicator on here says it's medium. And I'd probably agree with that. It's kind of like medium risk. You're going to get some good years, but you're also going to get some bit of a dips. We did see some negative years there, so we could expect that. The top 10 holdings inside the fund. So we'll go through this really quickly. I'm just going to zoom out a little bit so that my webcam doesn't cover up too much here. So the first and number one fund is RBC. A lot of actual Canadian ETFs actually have the banks at the top, and this makes sense. RBC and TD are the two biggest holdings, so I'm a big fan of that. I like both of these banks. Then we have Enbridge, we have CP, Brookfield Asset Management, Canadian National Railway, Bank of Nova Scotia, Bank of Montreal, Canadian National Resources, and then TC Energy Corp. So a nice little mix there, and we can see the weighted percentage here pretty evenly with RBC and TD slightly above all the other ones, but pretty even weighted percentage across the board. We can see all the holdings. If you click on all holdings, we can also see some of the different companies here. So we'll go to page 2. We can see Nutren, CIBC, Bell, Suncor, Shopify, ATD, Waste Collections, Manulife, TELUS, Constellation Software, Barrick Gold, Sun Life, Intact, Franco Nevada, National Bank of Canada, Cenovus Energy, I don't know if I'm pronouncing that correctly, Fortis, Pembina, and some other ones here. So, it's fairly diversified. Like if you really want to buy into the entire Canadian market, you're pretty much all those stocks I mentioned we're all pretty familiar with. Some people hold different ones. Some people are more focused on other ones depending on what you're going for. But this fund really does kind of capture a little bit of everything, which is super cool. And that's one reason why I think if you were to focus on one Canadian fund only, this would definitely be a fund that you could focus on. Financials here are going to be the biggest diversification or the biggest sector, which makes sense. Once again, Canadian markets are very focused on financials, which is why I would never recommend you buy 100% Canadian stocks. I personally go with the US S&P 500 VFE as 50% of my holdings to help diversify this, as well as holding on some other covered call ETFs to help diversify this. Up to you guys how you want to diversify, but just kind of take note that this fund, like most of the other Canadian ETFs, is focused heavily on the financials. Energy is going to be 17, which is not too bad. Industrial is 12, materials 10, and then communications, information technology. And you know what? At the end of the day, you look at this, actually is some decent sector diversification, but just keep in mind a good chunk of it is in financials, but it is not a bad setup overall. Like for the Canadian market, it actually has a nice little bit of diversification, so I'm okay with that overall. And then if you scroll a little bit further down here, we have some different reports and stuff if you guys want to look at some other things like that, like the financials and whatnot. I'm going to go to the fact sheet really quickly and just show you guys this. You guys can check that link. It is actually at the top here. We'll just go to the very top. The fact sheet is right here, so you can download that, and this will give you this nice little visual representation of everything. I don't think there's anything here that we haven't covered, but we're just going to look really quickly here. We can see the holdings and different things like that. So not too much here that we already covered. Once again, sector exposure. So everything that we pretty much covered is already in there, but you guys can look at the fact sheet if you guys want to kind of see a basic, nice little summary of the ETF. All right, so before we close the video and you get to the end, we're going to obviously look at the good stuff. So what is the overall returns for this ETF? There's two different things we're going to focus on. So the first thing is going to be the overall stock growth. So this would be the stock price. How much has the ETF returned in terms of growth? And then we're going to look at the dividends and the stock growth, because it's important to look at both those two things together, because that's going to give you your full return at the end of the day. So the first thing we look at is the 1 day return of this fund is going to be down -8% time of doing this video. 5-day return is down -7%. Obviously this stuff doesn't really matter because we're looking at long term. 1 month return is up 5%. 6 month return is down -4%. Year to date is down -5%. So we have seen the overall Canadian market kind of dip a little bit, I guess. Once again, depending on the funds, it's going to be a little bit different for you. But because this is investing into the wider Canadian market, you're going to see a wider kind of growth here. So like, let's say the banks do really well. If you hold an ETF that holds the banks, you might be doing really well for that year. But since this fund really has a wider approach, it's really going to be the overall wider Canadian market. The 1 year return is down -1. The 5-year return is plus 38%. so it has done well. It did take a bit of a dip in 2018 and in 2020, obviously with the pandemic. I guess we're kind of getting past that, so if you guys are brand new, that was the pandemic, but we have seen some nice recovery since that, and then a little bit of a dip in April and July and June of this year, but we've seen a little bit of recovery as well. The max return is plus 80% over time, and this is since 2016, so that'd be about 10 to 15 years or so, and that's just with the stock growth. So obviously the stock, the past 10 years or so, the ETF has done pretty good, getting that 9 to 10% return. Now let's take a peek at the dividends and let's see what the overall return is with the dividends being reinvested. So I'm on Simple Wall Street to look at the overall returns of the dividends. This is another stock screener that I do use. So we have XIU, kind of a harder ticker to say here, brought up here, the iShares S&P TSX 60 index that we've been talking about. We can go down here to the shareholders returns, and if we look at the actual stock growth, we see these returns that we just took a look at on Google. If we go include dividend returns, so this would be if you reinvested the dividends, you would actually see a bit of a higher return. So the 1 year return with dividends reinvested is 2.3%. 3 years is about 40%, which is pretty solid. And then the 5 year return with dividends reinvested, which gives you the real return, is going to be that 60%. So over the course of 5 years, you would have got 60% return. That's pretty significant. It's pretty decent. So once again, I always like to look at the dividends reinvested because you get the actual total real return included as well as the stock growth. So we'll finish up this video with some conclusions, and I'll show you guys my thoughts on the actual ETF itself. And like I've done a few of these ETF reviews on my channel, the cool thing about ETFs is that you can really buy a lot of these ETFs and do well. They hold good stocks as long as they function, in a basic way and you understand the way the ETF works. And in this case, this is just a basic ETF that has just basically holds these stocks. You can do well. So really, the cool thing about that is the ETFs is you really can't go wrong in a lot of cases. The problem is there's a lot of different ETFs out there, and it can be a little bit confusing in picking the one that's right for you. So at the end of the day, you got to look at the ETF, you got to look at the fees, you got to look at the holdings, you got to look at the way it works. You got to ask yourself, does this ETF work for me? Does it fill some kind of goal, or does it fill some kind of empty hole I have inside my portfolio? If you're looking for an ETF to hold on to that's Canadian based, that's going to buy you into the Canadian market and buy you into the overall market and have pretty decent diversification for what the Canadian market offers, this ETF is pretty solid. You could go with this ETF. It would be a nice ETF to hold. It's pretty sweet. So if you're looking for that kind of growth-based kind of S&P 500 version of the Canadian market, then this ETF is definitely good for you to hold, and I would highly recommend it. But there are some other good ones out there as well. As I just mentioned, there's lots of different kinds out there, so it's really up to you guys to decide which one is right for you. Alright guys, that's it for this video. I hope you guys enjoyed it. Let me know what you guys think in the comment section. If you guys have any questions, feel free to let me know. If you guys did enjoy the video, be sure to give it a big thumbs up. And if you guys want to see more videos that I do on this channel and follow alongside with me as I do my weekly updates for my own portfolio, be sure to subscribe. Anyways guys, take care. I'll see you guys later. Thanks for watching, and have yourself a good one.